Hey, welcome everybody. Welcome to the Closing Beat and happy Monday. How we doing out there? Hope you had a good Thanksgiving week. You got some time off there. It's always kind of a quiet time for us, so we took a little bit of time off, but we're back to do this all over again. If you're watching for the first time, this is called the Closing Beats, a stock market update show that we do usually every day to go over the stock market. And we do things a little bit differently. We're financial advisors here at Jazz Wealth. Hope you'll check us out. And what we like to do is try to show you how we look at things that other advisors don't. Other advisors don't manage their own portfolios. They just buy mutual funds. We like to share that with you, talk about the stock market, share some of the research and data and stuff that we look at for all the market geeks out there. So I hope you will enjoy, and if so, maybe hit the thumbs up button, subscribe button, all that good stuff. Let's talk about the stock markets because it's the end of November. That's it. It's the last day of November. It's already December, and the stock market put up quite a decent gain. Not today, but, decent gain for the month there. If we take a look over at the markets, you got the S&P up double digit. We got double digit gains almost for every index that's out there for the month of November. Really, really good one there. Value was your biggest weakness today in terms of whether it was large, mid, or small cap value. That was the weak spot, but here's the S&P sitting near the highs, just waiting for the next catalyst to see what's it going to take. Is it going to be vaccine? Is it going to be virus numbers declining? Is it going to be student loans getting paid off? I don't know. We'll see what it's going to be. But for the moment, we're a little bit weaker here, sitting at highs. Today, a little bit of a weak down day. The S&P actually gained just about 11%. And this is the problem with live stuff here. Let me see. I want to try a little something if we can do this. This may break, I'll be honest with you, but I'm going to go over here. We're playing with a new tool that we've got here. Let's say the S&P greater than 10%, because we were at 10.96, somewhere like that, in a month. Let's look back 20 years just for fun here. How often does that happen? It's kind of a little tool we're playing with here. But anyways, if we look at the S&P 500, look at that. You only got 3 times, and the little text over here tells you the S&P SPY has had a return of more than 10% over the span of a month, a total of 3 times in the last 20 years. So we've got currently November, 10.88 is what the number was there. And so we see that one there. April of this year is the last time that happened, 12.7%. And back in October 2011, you got just a double-digit gain there. Coming off almost a 7% decline. In April, we had nearly a 13% decline. Remember that, coming off the virus lows there. And last month, we were just down 2.49%. You can look forward a little bit here and say, all right, well, in April, we gained 12.7%. What happened in May? The momentum continued, right? 4.7%. In October, we gained 10%. The momentum was basically flat for November of 2011. Not a lot of data points here to go on. What I really wanted to share with you without getting in trouble was that it's very rare for the S&P to gain 10% overall. Not very common for that to happen. Also, if you take a look at the S&P 500, we're currently sitting with over 80% of the S&P over the 50-day moving average. That's a big deal. In our Notes from Jazz email this weekend, we actually send that out every single weekend for customers. We actually talked about the forward performance after something like that happens. Here's an example. S&P is currently trading above the blue line. That's the 50-day moving average. And over 80% of the stocks in the S&P are above the blue line or the 50-day moving average. Well, one of the things that we track is to go forward and see how often do we have strong returns going forward or what. And so in our email over last week, what I did is I pointed out that when we get to this range, although it is kind of common, forward performance in the next week is actually pretty flat, right? And that's kind of how we've started here. So what you're looking at on the screen is when 0 to 10% of the S&P 500 is above the 50-day moving average. That's happened 146 times last 30 years. Here's the forward performance. When only 10 to 20% are above the 50-day, it's kind of rare. Performance tends to be really good going forward over 1 week, 1 month, 3 months, 6 months, and a year. Well, we currently find ourselves down here. Very strong market, 80 to 90% or above the 50-day moving average, happened 1,276 times. But over the next 1 week, very limited in terms of performance there. Over the next month, only a 1% average gain, 3 months, 2% average gain. So you can see basically for the rest of the year, we're not expecting these stellar blow off the top type runs here, although it's possible. That's just certainly something that we take a look at. As far as the S&P energy continues to dominate, here's a quick look at the top sectors, top 20 stocks for the month of November. What we did is I put the ticker symbol here, their name right here, the sector they're in, which you can see the energy sector is represented the most out of the group there. Great month for energy. 1 month returns, 78% for Oxy, Devon Energy. You got Apache, Diamondback in there, names that we've talked about quite a bit there. These are your biggest gainers throughout the month overall. And the year-to-date gains. You could see that those that were the weakest tended to do the best. There was a lot of money moving into energy overall, which, by the way, energy is the most widely shorted sector out of the S&P 500. In the research site, we actually did a post to kind of share that with you, to talk about the performance of the different sectors and number of stocks short versus those that want to be long and everything. I'll expand on that just a little bit here for you, but if you want to check out the research site, jazzwealth.com/research if you're interested, for all kinds of good geeky stuff. And we got a really geeky one coming up for you, for those of you that like it. Anyways, not to get off track, we'll go back to the stock market here. You can see the S&P basically just hanging in there. The NASDAQ was the first and the only one to go positive here for the day. It started off the day with a little bit of a sell-off. Overnight was even weak, but we retraced all of that, ended up positive for the day. The NASDAQ was, the Apple stock was a big help, and also semiconductors. Tech in general was the strong area today, but if you break it down a little bit further, as I'll do for you in just a minute, you got Qualcomm moving higher, Intel, nope. Forgot how to type. Intel up 2% on the day, coming off the lows there, hopefully. And AMD, one of the better performers in the semiconductor industry today, up 6.25%. If you take a look at the Russell 2000, that was one of the weaker areas. In fact, the weakest major index today. That was the strongest. Over the last couple weeks, it's just been really strong. You can see it here, taking a little bit of a break. I don't think there's anything to worry about at the moment. I think a lot of people would hope that it pulls back. Small cap value was the weakest spot, down 2.5% on the day. So that is basically what you have for the stock markets. Do you like watching our FinTips videos? The answer is yes. This week, we've got some good ones for you. Today, we posted how much do you need in that gap account if you're going to retire early? So you know that if you're going to retire before the age of 59, for the most part, you need to have a regular account, some sort of liquid cash, brokerage account, individual account, whatever it may be, to help fill the gap between your retirement age and 59. And so we used an exact example of a customer that wanted to make that happen, so we shared that with you today. We're going to do on Wednesday how to do tax loss harvesting, and we're going to show an $800,000 account, how we would approach that for someone with a lot of money. It's actually a customer here, how to eliminate all the capital gains in your account for the year and potentially make yourself show a capital loss without breaking any of the wash sale rules there. So we'll break that down for you. And then on Friday, I'm going to get you fired up for the weekend. Just a little bit of a discussion. Should you really pay off your mortgage? How can we quantify the idea of paying off an investment that maybe is costing you less than what it's returning? So it's a different way of looking at it there that I'm sure will get some people to leave some comments that make me go, aw, that hurt my feelings there. Also in the research site, we're going to cover what we can learn from the most heavily shorted stocks in the stock market, as well as those that are the least shorted stocks in the stock market, S&P currently. And then we've got a clever study coming up, a different way of thinking of things there, if you will. Let's go over to the sector breakdown here today and take a look and see what we've got. How are we going to do this? We're going to go over here and take a look. Here's it's our new sector tool that we're using to take a look at what's going on. For the day, you got tech leading the way. Once again, tech back in the lead there. It took some time off. In fact, if you go back over to last month, tech down here is one of the underperformers. Energy was the big performer overall. If we look over the month, energy, let's call it let's just say 30% gain there. 28%. Just for fun, let's go back and try this again. Let's try the XLE greater than 30%. No, let's do 28 because that's where we were in a 1 month period over the last 20 years. How often does something like that happen? That seems like something that's pretty odd. And there you go. Looking back over 20 years, there's only one other time in history. That would have been April this year, coming off of a 35% decline, that it gained 30%. Or greater than 28%. And over the next month, it actually had still a little bit of momentum in it. After gaining the 30%, it added another 2% in May. Let's hope that's the case for energy here, that momentum continues because it needs it. If you look year to date, energy is the weakest performing sector. But here's what you can kind of see. It looks like a little bit of a spaghetti mess here. But if I back away for a second, look at the run-up over the last month. And then look at financials down here in purple, that run up. Now compare that to the other sectors. Look at tech up at the top. barely anything happened, just kind of flat there, right? A lot of these sectors had a lot of flat performance through the month of November. Energy, clearly the strong leader there, with financials coming in second place. We want to take a look there and see. If I go into energy here for you, we're going to look and see where was your biggest today. Let's look at the weakness. Today, your weakness is going to come from ExxonMobil and Chevron. Our little scatter plot shows that these are the two most heavily weighted stocks in the category there. And if we were to look out at ExxonMobil here, we can see that all of them actually, that are all the industry groups there, were weaker on the day. Exxon just pulling back after a nice little gain over the month of November. Chevron in the same camp as well. I think Chevron's just a touch stronger, pulling back towards the 200-day moving average. Those were your biggest drags on the day, accounting for most of the losses overall. If you were looking through that, energy losing about 5% on the day, so a little bit weak there. You can also see if you go back over here, and we sort by one day, energy is going to be at the bottom, financials. So the two sectors that actually were the strongest through the month of November finished out the month of November with what? Probably a little profit taking. That's what you gained from that, right? The weakest sectors today were the strongest through the month of November. All right, financials, the other big gainer over the last month. If we take a look over the last month here, financials come in second place. They were the purple line there with about a 17% gain. That's also a bit odd. Financials don't normally do that. If we go over to tech and take a look, that was your big leader today. But like I mentioned a minute ago, it was mostly due to the semiconductors. How can we tell that the semiconductors were the big gainers today? Well, we could pick any semiconductor in here. You can see them all listed. If I pick AMD, for example, you can see that our scatter plot up at the top has changed to show all of the semiconductors in addition to AMD. So when I click on one of them, I can see that all of them, for the most part, were positive today. We did have a little weakness here in Micron. Micron was the only one that was down on the day. I'm going to try to pick it out here real quick and just see where we're at, if I can get there. There it is. All right. If we look at Micron today and pull up a daily chart, look at the move this thing has had. Incredible move here, so a little bit of a pullback today. Nobody's concerned at all. One other thing I want to point out is the Fintech space, if we can take a look there. If we look at Fintech, let's go to PayPal. Just start with that one. See how PayPal was really the only one that was strong today? That was your weaker area. It's going to be Visa, MasterCard, names like that. See them all down here at the bottom. Not big losers, but in the semiconductor space, if you're looking for the weakness or for the standout, PayPal was your standout one there. Everyone other than that was basically weak. And PayPal, by the way, hinting at breaking to new highs. Let's see what else we can look at here. Consumer discretionary. I want to take a look over there real quick. In the consumer discretionary space today, which has done well, hit new highs and is now just pulling back a little bit, you're going to find that Carnival, down here at the bottom, Carnival with a 7% loss on the day. Actually, all cruise lines were weaker today. If I just sort by weakness here, you're going to find that you've got Carnival in the mix there. You've got Norwegian Cruise Lines, Royal Caribbean in the mix there. You know, just one thing to take a look at there. The short interest in these cruise lines is basically at highs. I'll share that here with you in a second. And actually, let's just go to it right now and take a look at our watch list for the day. So our watch list, again, if you're a research member, you can go into the research site and see a full breakdown of all of this. But we're going to look at stocks today with the highest short interest relative to the shares outstanding, because it's kind of interesting what's going on out there. I'll start with the first one on the mix, Las Vegas Sands. I've also got the whole graph up in the research site if you want to take a look there. It breaks it down by industry and everything else. Las Vegas Sands up 17% over the last month. It's down on the year. It doesn't take a rocket scientist to figure out, look at this. This is down on the year. It's not doing too well. A little bit of a recovery lately. 67% of the existing shares that are outstanding are short. So you can kind of understand maybe a little short covering there. Moving on to Discovery here. You can now kind of identify a bit of a short covering rally. 32% of the shares outstanding are shorts, about 1/3 overall. It's up 36% over the last month, so you got to assume that some of that is people taking their profits on the short position and moving away. American Airlines, this one looks interesting to me because, hey, it's not rallying, right? So American Airlines is up 33%, but just barely off the lows here. It's not going to scare any of the short participants, which happen to be 31% of the overall shares outstanding. So this pullback here is making those that are short stay comfortable with their short position. American Airlines has a lot of things that's going on. You know, they're not not doing the best right now. International Flavors, 25% of shares outstanding are short, and with the stock downtrending here, you notice that not a lot of people are scared. It's only up 6% over the last month, so maybe it's putting in a bottom. We'll see. What you want to look for on something like this is a break of the downtrend. That's where the short traders will decide to take their profits and move on. Right now, we're still a ways away from that. We'll come back to that if it does break and see what happens there. Iron Mountain is the only stock on the list that is down over the last month, even with today's gains. Actually, that would put it back to flat. So breaking above the 200-day moving average there, 1/4 of all the shares on Iron Mountain are currently short. A little bit of volume picking up there, so maybe a little bit of short covering today. Not sure on that one, but we'll see what happens going forward. What else do we have for you? Viacom. Viacom consistently and steadily trending higher, up 25% over the last month. 20% of all shares outstanding are short, and that number is quickly declining as people are likely taking their profits and buying back those shares moving on. Norwegian Cruise Lines is going to be the last one, I believe, on the list that we'll take a look at here today. What I did is I put the top and bottom 10 for you. If you're in the research site and you want to check that out, it's $13 a month. I don't know if you're interested in that thing. Helps us out a lot. Hope you'll check that out. But Norwegian Cruise Lines, currently 20% of all shares are short. It's up 40% in the last month there. Still down very much year to date. And they just issued some more shares there to raise some debt to keep themselves going. Also on the list, if you happen to check it out in the research site, you got Carnival Cruise Lines down 7%. It was your weakest one on the day, as I mentioned a minute ago. 14% of all shares outstanding. That's not too bad, not too much above average. So something to take a look at there. One other thing I will point out is that the S&P, the percentage of shares in the S&P that are currently short is right about 1.7%. It tends to hover around 2%. So anything above 2% is considered over short. You would say there's more people betting on the downside than they are on the upside. Anything over 2%. To give you an idea, if we go back to that virus decline right in here, we just barely got over 2%. Right? So it's not like it's ever going to be like 50% or something like that. That's taking account every single stock in the S&P and breaking it down that way. So that's what you have there. Hope you found that interesting. Just a different way to look at it and more data available on our research site. Let's take a look at stocks in the news here today because we've got some of them. All right, first one up. You got Ford. Barron's came out this weekend and said Ford could literally double in price, back to $18 a share. They like the new CEO. They like his experience. And so Ford didn't really do a whole lot today. That's kind of typical of Ford. But Barron says, hey, that thing is going to go to $18 is what they believe there. Going over to United Airlines, Wall Street Journal said that the charter flights have begun for the vaccine from Pfizer. So that didn't really help them out today, but United is projected, or is, I guess, confirmed as being the charter flight recipient of those as they distribute them all over the world there. So that's helpful. I mean, it's in the news, so thought I'd point that out. Shopify says that Black Friday sales were off the freaking charts there. 75% year-over-year increase in terms of sales for Shopify. Almost back to new highs today. Gained 5.5% on the day. Moderna, that's going to be your biggest gainer. What a day, man. 20% for Moderna, adding to its gains. Just in the last 3 weeks, you got Moderna up 100%. That's crazy. Anyways, very extended. Keep in mind, very, very extended here. They filed with the FDA for that emergency COVID vaccine approval there. With all the news you've seen over the last couple weeks, we don't have to revisit that again for you. What was the other one there? Apple in the news there. They think that the new MacBook is going to help the stock more so than the iPhone. I don't know. We'll see what happens there. Up 2% on the day, and that was your leader in the tech space in terms of the contribution that they made to the tech sector here today. A couple others I'll point out. Alibaba down a little bit, 4.7%. JD.com down about the same. Chinese stocks down on the day because of an upcoming vote, which is actually bipartisan, to limit to restrict these stocks and what they can do and what they need to report if they're going to continue to be listed on the exchange. Before everybody emails me, this is not a meeting they're going to do it on Wednesday. This is not an effort to delist them as has been described in the past. This is an effort to impose more restrictions that are more like those of the American companies that are listed on the NASDAQ, and I agree with that. I think they should have to do that. Why should there be any difference there? DoorDash filed to go public as well. That's also in the news. And let's see, I'll go over a couple more things, and I'll take your questions, see what we got. Guess is going to report earnings there tomorrow. Yeah, I always like to be accurate here. Yeah, Guess is going to report earnings. At Home Group will report as well. Box, which is Dropbox's sort of competitor there. You got Hewlett-Packard in the mix. They're going to report earnings. Network Appliances, or NTAP is the ticker symbol everybody looks at there. They'll report, and Salesforce.com is going to be the big one that gets all the headlines because of their efforts to buy Slack, right? So pretty interesting there. Dividends, you got Costco paying out that $10 special dividend. That's today's ex-dividend day for that. Goldman Sachs, $1.25, and Fastenal, 40 cents. I will try to answer your questions, see what I can do, and we'll wrap it up there. Let's see what we can do. We didn't get any new company today with the vaccine. Remember the last couple Mondays? Been getting that there. Yeah, I know. I love it. I love it. What are we looking at here? Macy's nearly doubled since the value rotation started. Yeah, I mean that's just one of them. I mean there's been a lot of big move into value. Naturally today, not the case, but over the last couple weeks, definitely a big move into value. They've been doing well. In fact, if you take out, how do you look at it? If you were to look at the S&P 500 in its traditional sense, the weighted S&P 500, and then compare that to the equal weight S&P. So there's always a debate about that. But if you look at the equal weight S&P, that's actually beating the market weighted weighted S&P 500. Why is that? It's mainly because the big 5, 6 FANG stocks have not been carrying their weight. Energy, financials, everything else has been doing the heavy lifting. Anytime that happens, you're going to notice the equal weight S&P is going to beat the market cap weighted there. So something to consider. I don't know why that's in my head, but there you go. Yeah. What do you think of oil and the upcoming OPEC agreement? This happens. This is always the case. You expect the volatility there. There's always the will they, won't they sort of thing in with that. We do have that meeting coming up. I believe it'll go Wednesday and possibly into Thursday our time. I forget if it's Tuesday, Wednesday, or Wednesday, Thursday. But yeah, that's going to create some volatility. You already got brokerage firms starting to limit margin on crude oil and the like. So yeah, we'll see what happens. Yeah. I don't know about a cut though. I don't know. I mean, if it were me, I would, but I don't know. There's some stubborn people in that group. We'll see. I think they're going to draw it out. There'll be a little bit of walking away from the table and all that stuff like they always do. NEO finally pulling back today as well, down 6.5% on the day, currently trading a little bit lower after hours. Very extended stock. You want the stock to pull back. I know you guys like your NEO, but you don't want to buy it so extended after such a run there. So hopefully it does pull back there. Yep. I hear Chewy did well through the Black Friday and going into Cyber Monday and everything. Likely why the stock's up 4.5%. Momentum stock continues to do well, currently in beast growth mode for them. Yep. Any solar ETFs you can invest in? The most popular one is ticker symbol TAN. Would be the one there. So if you're taking a look, TAN is the most popular solar or alternative energy ETF. If you want to look at that, down a little bit today and hopefully pulling back for you. Yep. Nikola had a rough day as well, not just because of the lockup, but yeah, they had a rough day. That's a tough one there. Yeah, I hear you. Mm-hmm. I love it, man. Yeah. There's an argument for that. Dylan says, how do you feel about the high PE ratio in the S&P 500? You have the argument that people say this is way overvalued. We expect due for a pullback, maybe time it with some tax loss harvesting at the end of the year because we don't know the Biden capital gains rates, all that great stuff. There's also the other side of it where they say, hey, valuations are high. They deserve to be high. They should be high. Big deal. Buy high, sell higher. All that. I don't like that one. That one. I'm just contrarian by nature, I think. Yep. Will the vaccine rollout create an imbalance in the world markets? No, I don't think so. That's an aggressive statement. I don't think that will be the case. Yep. Tesla always seems to pop during the show. Yeah, that's a pattern, you know. Doesn't matter what the pattern is. If it works, it works. Yeah. You think the S&P has more room to fall? What's your take? Well, historically, December is the best month of all the months if you're looking at the S&P 500. I think there is a great argument for the S&P to pull back through December. I think there's also going to be pressure towards the end of the year because we don't know the capital gains rates. You've got Biden slowly just kind of coming up with ideas of what he wants to do. What campaign promises is he going to follow through with, and which ones are kind of just going to go by the wayside? But I think one thing that the wealthy are preparing for, just because I happen to see that every day, is I would rather try to take my capital gain this year than next year. Because normally you'd wait till January, so you don't have to pay until the following April. I think you might see a little more pressure than previous years there, just based on what I see and what I'm kind of reading from the higher net worth advisors that are out there, the positions they're taking. Yep. Are ETFs worse than the market when the market goes down or goes sideways? That's too broad of a question. Are we talking sector ETFs? Are we talking about commodity ETFs? What are we talking about there? If you're looking at index-based ETFs, obviously they're the same. So I don't know how to answer that question. There's just too much to do there. What ETFs are we working on? Yep. So we'll see. I don't know. Don't have a good one for that there. Oops, typed in the wrong symbol. Gilead Sciences, you like the idea of that one pulling back? I like that it's pulled back, right? So this was when they were all into the virus mess. It was volatile back in day, every day there seemed to be an email, should I buy it now, all that. Since all that's floated away, it's now sort of trying to put in a higher low. That's one positive. The other positive is the volatility is gone, right? So this is a very volatile time for the stock. Down in here, you got a lot of just sort of settling in, very calm markets, people repositioning. Maybe it's a tough one to say. Possible higher low here. It's just too early to tell. So it's not one that I would be like, do I got to buy it right now? Am I going to miss something? I'd be willing to hold out. You think apps can continue climbing in the near term there? Cautiously. This is what I would be looking at. You've got obviously a great move here. This is a trailing stop stock. Just like Chewy, right? You would say, okay, this is doing well, but I want to be ready and lock in as much profit as possible. So if you own the stock, I'd be thinking trailing stop. What are we going to do? Yep. I like it. Why do you think Moderna is doing a lot better than Pfizer in terms of stock prices? Could be the vaccine. I mean, I don't really read into these biotech stocks too much. Darn it. I don't know why it's not coming up now. But I don't read into them too much. From what I have studied and researched, I think it's a temperature thing. You know what I mean? If you've got something performing just as well, but it's easier to distribute, that's probably the issue there. Yeah, and it's frozen. That might be telling me it's time to go. I love it. Yep. What do you think of Lowe's? Seem to like buyers off the low today and about to cross into positive technical territory there. So Lowe's has outperformed Home Depot all year long, almost perfectly. The pullback here puts it more on par with Home Depot in terms of performance. Maybe it's a little early in terms of buying the dip there. You try to buy it on a down day if you could. You like that it reversed today, but I'd be looking for a down day with a down day in the stock market, preferably. Yep. Yep. Tesla's going to have a whole lot of volatile days ahead. Just be ready for that. You still have like, I don't know, 21 days or something like that, but you're going to have that positioning. It's confirmed. It's going to be in the S&P. So as you have that positioning, they haven't said yet if they're going to do this in phases. I think they should. But as of now, December 21st, it goes in there. So everybody making their adjustments to adjust their index funds, their index-based ETFs, things like that. It's going to be kind of a sloppy mess there for Tesla for a while. Expect the volume to be higher. All right, I will wrap it up there because I think I did all right today. We've got everything we need to do. Hey, check out our FinTips videos this week. Got a lot of cool things going on there and some really cool changes coming to the dojo, the research page, all kinds of good stuff. I'm just so excited about that. Hope you'll check it out. Enjoy the rest of your day, and thanks so much for watching. We'll see you tomorrow.